The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 21st of March. Now, let's just go through things in a very orderly way. The Dow recycled. This became a new leg C with the breakout yesterday. I'm calling it a C. I could call it an alternate count F/C. I don't see any reason at this particular point why I need to go to that extent. D is where other things can happen, but C says that there should still be a higher high. It doesn't tell you how high because other things have to do that. This is the Chapman Wave inside track. This is the up channel, and it held the support level from the inside track propellant zone. And now it's just tagging the very start of the Chapman Wave inside track repellent zone. Nice action, very good, up 248 to 39,760. This is now Alexa, and this is what I did in my webinar on Tuesday. I discussed in great detail that let me just go there. After if I'm discussing it, let me just put it into real live action. Here we go. That the 9-period exponential moving average was just about to cross negative. In fact, in the YM, that's the futures, when it had already that morning, like you can see it, there have been two momentary crossovers to pink from the 9-period moving average. I call this my indicator of last resort. Why? Because when everything else is starting to, the MACD's down, the stochastic's down, way under 80%, even down at the 40% area, the on-balance volume is starting to pull back. The one indicator that can keep you along in a position, and I have to admit that we've had long-term longs, and I didn't want to touch those at all, but shorter term, you see how we went sideways over there? I anticipated there was going to be a pink 9-period moving average with the 9-period moving average crossing negative under the 14, and that would set in place a deeper pullback. That only went sideways. In fact, there were days where we were up a very nice percentage it was just a small 1-to-1 short. The DOG is a short position on the diamonds. And I called it a trading position. And then we got taken out for just a very tiny loss, 0.7% or something like that. And now we're back to all those long positions, just staying in the long positions. And look at the breakout. Look at this green 9-period moving average. This is the YM. That's the futures. Let's just go to the Dow. It'll be very similar, but the other one has overnight trading. So look at this. Also very nice. Now it's moved up quite significantly. It's going to take a lot for it to really come down and cross pink. You're probably 38,500 to 38,300 is what would have to do it if it happened right now. Hasn't happened, right? So I said to subscribers in my webinar, and this webinar is really an ongoing one because we've got positions we wanted to take. I've discussed them. We've started taking those positions. Most importantly, what I'm looking at here is that, now let's go back to this, is that if we're already in leg C in the weekly chart, that doesn't mean to say, oh my God, the whole thing about the Chapman Wave is that when you get to the fourth highest peak D, that's where other things can happen. That's where you can get the biggest pullback. But not if all the technicals are still holding, because it could recycle and it could go to an instant restart and just start a brand new move to the upside. A whole bunch of things can happen. But that's your target, is to get to that D, and then you have to assess. So that says daily strong, weekly strong, monthly strong. Just leave it at that for now. S&P, daily strong. I have this as a leg E. Well, there's a big difference between a B or a C and an E. E says you're getting a little extended. You can have an alternate count, but at this particular point, you're going to the outside of the green up channel resistance line, and that's the repellent zone, and you're above it. Not going to fight anything. The MACD finally crossed positive. The 9 is way over the 14-period moving average. The on-balance volume is okay. It's not great. It's okay. That's good. The stochastics at 84%. Very good. The MACD did flip positive. And look at this gray line right here in the daily chart of the S&P. That's the relative strength, which was weakening. It was making lower highs and lower lows, and now it's started to rally quite strongly. Not going to argue with that. At this particular point, the trend is back to up. And leg C in the weekly chart, you still have to have a whole week with no new high, even by 1 penny. And that gives you your peak C. And then another week where it goes 1 penny above that high, that goes to leg D. All right? We haven't got there, so that's time involved. Leg D already, and so everything's got different numbers. It's amazing, except for those weekly charts. So the monthly chart is in leg D. Look at the IWM. It's been lagging. It's trying to do some catch up today. 207.59 up $1.50. Nice action. If it can go to 211.88, something just in the 211s, that'll say to me that weekly chart could be an alternate count, whatever it is. It's a very good thing because that'll get that MACD positive right now. The MACD, the moving average convergence divergence, is weak. The relative strength, the RSI, is actually moving quite nicely up. Not even close to overbought, but it's moving up. The overbought level is the blue, right there, on balance volume. It is a little overbought, not yet overbought. I'm getting to overbought. And the stochastic is way down at 34%. Either it's got a lot of room to get back to the 80% level where it was when it was making that peak F top at 210.41, or else it's going to fail. So there's a divergence. But that 9-period moving average is positive. Not going to fight that. That's a good sign. It's already with a doji candle at a peak D in the weekly chart and only a leg B in the monthly chart, and the stochastic is just for the first time getting to 80% in a long time. That's a good sign. MACD is good. So my thinking was for subscribers, is this an area that we want to get into, IWM? So instead of that, today we went into something that is an area that's been so weak. It's so weak that it really needs to show strength. We're in and had a huge spike to the upside. It's giving that back. That's okay. But it's an area that I'm hoping finally finds some technical veracity. Because right now the technicals are a little weak. I'm there because I think in the rotation that I'm anticipating. Now let's just go to this. We'll look at different areas. But someone had asked me, so that JP Morgan was making an all-time high 2 days ago, yesterday again, and today, and it's up at 198.60. Looks to me like it wants to tag 200. It's a leg C in the weekly and a leg C in the monthly. Fantastic action. I have to chuckle because I play tennis with someone who we hardly ever talk market or anything. I don't really get to talk to people about the stock market. I don't want to give any advice. It's just a silly thing to do because you can say get in and then you forget. You don't know that you're supposed to also tell them when to get out. And years later, it went beautifully up, but it's also gone beautifully down. And they say, So I don't do that. But he bought JP Morgan on the way down last year, somewhere around this time, I think it was. Nice move. All right, I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let me just talk about this for a moment. Point to higher peaks. And if it goes to a certain level, I say that you've upgraded from a buy signal to a buy mode, and that should take you to at least a D. At D, other things can happen. Well, in this particular instance, what we've got is in the E-mini, you've gone to a cup formation, to a leg F and then a peak F in the 10-minute chart. You went to a peak G, pulled back quite sharply in the 5-minute chart. You went to a peak E, and now it pulled back quite sharply in the 1-minute chart, the most recent moment. So you've got peak A, and this moves in 25-cent increments. Goes to a peak B, walks the 9-period moving average, still walking the 9-period moving average, but there's a peak right here, and it's hit 3 times at about the same level, 531.8, 5318.25. So I do this. I call that a peak C1 and a peak C2 because it's acting like a D. It just didn't go that extra little increment to make that D. But that's all you have to do, because you could treat it as if it was a D and say, okay, I'm ready for it. But as long as your technicals are holding, look, we're watching it live now. There's a really good chance that it will make that D as long as that 9-period moving average is strongly above the 40. MACD is quite good. Stochastic is kind of a little weakish. On balance volume is a little weakish. A little gray relative strength is a little weakish. But if you look at the 5-minute chart, that green 9-period moving average, since it crossed over at 7:35 this morning, 7:20 Eastern time, at about 5:306, that's held, even though you spiked to the 5:320 level and then came all the way down to the 5:309s. Here you are walking that 9-period moving average. And what have we done? We've just gone to that leg D. I just wanted to explain it because someone had asked me, I'm not sure if it was yesterday or the day before, how do those peaks C1, C2, or even C3s work? What's the implication? The implication is that if you start to see weakness, you can treat it as if it's a D. That's all. But I use it more as a warning, because sometimes it will still get to the D. That's where you've got to be a little careful. Now it's got to the D. Now we have to start being a little careful. We'll come back to this. I just wanted to talk about anything that's technical. That's what we're here for. So the Dow's up 311, S&P's up 33. That's kind of in sync together. What's important at this particular point is if you look at the TLT, this is bonds, it's just not doing much. And that's just telling me that the TBT, which is the yield, is holding very nicely. It's not giving up anything. It's up at 34.14. That's 3.414, up 0.04. And if you look at the weekly chart, not too great, but not bad. And it's very close to actually the pink line going green. So that just says to me that the Fed, I don't want to talk about the Fed. The Fed's the Fed. What they said, it's the market's response. And so far, the market's response has been very positive. Okay? Now, what I do want to talk about, though, is this move in gold. So gold is now up 24. That's fantastic. I mean, up 24. It was at 2,225.3 in the continuous contract. It's now at 21.85. I would say that a 40-point decline from the high of the day is just telling you that there was a little excessive, a little too much enthusiasm. And that's the reason why I was very hesitant today to say we were in a gold stock. We took a tiny loss because I still wanted to have a stop in it. And then it exploded to the upside yesterday. And even this morning, it's starting to pull back. And that's just saying to me, it is an area of interest, but I'm just a little suspicious of the moves. The moves have been maybe Tom O'Brien, the expert in the whole gold area, maybe he can explain a little bit better. But as far as I'm concerned, the steadiness of the move is impressive. If you look at the GC contract in the weekly chart going to a very quick peak C and then a leg D, the move above the very strong resistance line, Chapman wave inside track repellent line. Let me just put this down a little bit right there. And holding so far this month above it. It's the first time it's done that. It's every time in early 22 it did it and then failed, then did it again in 23 and then failed, did it again in November or December of this past year, failed, and this time it's green and it's holding. So that to me is good. But there's just something's not right. And if you look at the GDX, look at this, the GDX. This is the gold miners, a leg D already in the daily chart. It got to the inside track repellent zone and is pulling back. I'm not saying there's anything wrong. I'm just saying there's something not quite right in the way that it's acting and the reasons that it's acting. Now, if it's a direct correlation with interest rates and all that, then I don't quite see it. I'm not sure what it is. So even though I'm looking at some of the gold stocks, I'm really kind of intrigued. I would like even some silver stocks. Look at silver. It's a slightly different chart pattern. The chart pattern says it made a huge leg up yesterday, then failed. And then it made a huge leg up today and failed in leg D, up at 25.975. And if you look at the weekly chart now, what I like to do is I like to take former trend lines and just take them from the same place, and I like to just move them. After all, you've got technical tools. They're there to use in a technical way. So I'm doing that right now. So that's my new inside track repellent zone. Let me just get the red line so I can give it to you right there. Right there. And it's fading. So while things are happening that are kind of positive, the weight of evidence is saying to me that not everything is right. Not all's well in Denmark, or whatever the expression is, right? There it is. Okay, so let's go to like ASA is a stock that we often look at. I just look at it because it's a gold mining stock from South African stocks. It's like a little fund. Holding quite nicely. It's gone to a leg B. It's so interesting because so many of these gold stocks, they're just doing everything independently. Look, here's ASX, which is Now gold, GOLD, Barrick Mining, peak A, peak B. Here's your peak C, just slipping under the 200-period moving average. But look at this weekly chart. It's very selective, and the ones that are doing well are actually doing very nicely. But so that's what I wanted to just point out here. There's a relationship here that doesn't make sense to me. DXY, look at the dollar at the high of the day, up at the 200-period moving average. Something is really weird. That's all I can say. And that's why this particular move from yesterday at 2 o'clock, all round, is very suspicious to me. Suspicious doesn't say.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back. Oh, my, look at this. We got to that D. Remember, I said peak C was C2. You can still go to the D. You went to the D in the 1-minute chart. at 53.21. And there's a sharp sell-off that took you. This is a 1 minute chart. Of course, sharp sell-off doesn't mean sharp sell-off. It just means in the 1 minute. So, and where did it go to? Right to the 200 period exponential moving average of 53.12. Interesting, huh? And it's a G in the, now I can put in the rectangle. That's so important. This is what I was anticipating could be the case. Now you've got a rectangle in the 5 minute chart. It just says very clearly a push into the 53.24 area would be very, very positive, and a slide below 53.05 would be quite negative. And you've got the bowl formation with the left side, right side price time match right here in the 10 minute chart, and it says nothing to see here. 5 minute and 10 minute 9 period moving average are still very strong. Don't get carried away. Just use that as your benchmark. I'll be back here in a moment, but let's just go to IYT. So the question came in, Basil, is there still that relationship between the transports and the Dow? Yes, there is. In the relationship that there's a rally towards highs in the iShares transportation average ETF, but it hasn't made a new high in the 71s. Right now it's at 70.46, a nice kind of for a V-shaped pattern. It's attempting to do that. It's a peak C in the weekly. I suspect it'll get to a peak D in the weekly at some point. So with that said, you remember we were looking at the SMHs. We have no shorts. All the shorts took tiny little losses, and they were trading shorts. They actually all had nice profits. We did take some money off some of them, but mostly we try to hold them as a position play, and got taken out yesterday. Fortunately, because they had gains, I could raise the stops, and they were very, very tight stops, 0.7 or something like that, or 1% or 2%. Now look at small positions. So 227.62 up 6.35 in the SMHs. The high was made at 239.14 on the 8th of March. It pulled back to the 211s. Not a big deal. It's a 10% correction. You can expect that at any time. You haven't had a 10% correction, probably until since late January, early February. And that was very quickly pushed as this Chapman Wave inside track repellent zone was taken out. And now I can extend it because it's still an active technical indicator, and that goes right to there, which is where we are at right now. I won't keep it for long if it's not going to do anything. It'll just be a waste to there. Okay, so within this context, I'm anticipating, now this is just an anticipation, doesn't mean to say that it's going to actually happen. But in the market, you want to put in the various technical indicators that you use and see how everything unfolds. And in this particular instance, I'm anticipating, I'll draw it in, and I could be totally wrong, but this is what I'm anticipating, and that's kind of what I'm looking for. Yes, you have a cup formation here, but there's a chance, because of the way that the semis, some of them are still very overbought and need to consolidate a little bit longer. I'm anticipating that there's going to be some kind of an arch formation right here underneath the high. It's just an anticipation. We don't have any position in the SMHs right now. I thought, all right, maybe it's time to go long for a bounce. I think that this is the one that's telling me, be careful. Not everything is in order. You've got a peak E in the weekly chart, and only leg C in the monthly. That's already still positive for 2024 for the year. But shorter term, I'm thinking we're getting close to some kind of reversal. Let's just say today's Thursday. By Tuesday, can't go later than Tuesday, but if by Tuesday it closes, the SMHs, and the reason why I'm spending a little time on this is because the SMHs, my rule of thumb is that where the SMHs go, the general market is going to go. They are the fuel, like the oil sector used to be the fuel, or still is, but was the fuel for the whole of the 1900s into the 2000s. So the chips are the new fuel for going on in the future. That's in the year, in the millennium. All right? or 20,000 for a good chunk of those 100 years going forward, at least a good part of the decades, let's say. Maybe 200 or 200 years, these chip things are going to be so important. Can you imagine how they, with the exponential usage and what they got, billions and billions of chips it's amazing. Just these little dots, and they squeeze them in. It's quite incredible. And it's so fascinating. Humankind, we're so good at anything mathematical. When it comes to human nature just intercedes, gets in the way of things that could be quite good. All right, let's get back to our story. So the SMHs, let's look at advanced micro devices, had a big spike early this morning, went to 187.67. It's now at 179. It had a 227.30 all-time high just a week and a half ago. There's only a peak C in the weekly chart, but wow, that's quite a pullback, right? If you're looking at AMAT, that's done very nicely. AMAT is up near the highs of the day, almost at an all-time high. This could be an instant restart right here. Remember, if you got if the third bar after D goes above the D, you have an alternate count. Well, this is the second bar, so this is F/B. That's going to go to G/C if it goes just a couple of pennies higher. I need to check 214.10. I think it's so close. 214.10, little tiny doji candle, all-time high of the 7th of March was 213.60. 213.60, that means this has started an E. It could even be an alternate count, but I'll call it an E for now in the daily, and it's gone to a G/C in the weekly. Wow. Still very, very positive. Okay, with that said, let's go to, what was it someone asked me about? Oh, ARM. ARM Holdings, yeah, that still hasn't taken out that 164 round number all-time high, 164.00, 12th of February. And here it is at 135. It's had quite a few round numbers. Even today, so far, the high is 137.00. And I don't know if any of you noticed, but many of the stocks, especially in the semiconductors, had round numbers overnight. In other words, after the close, just after the close, when they were trading after hours, they had run. Dow's up 340. It's up 30,000. Target conditions are up.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. So look how important the 200-period moving average is. Look how many times the 1-minute chart used this as a springboard to move to the upside. Even here, you've got this dreaded H pattern. It tested it successfully, and now it's running, trying to get back to green. And remember what I said, this is like the 5 minutes. This is almost like we're looking at those daily charts with the 9-period moving averages. Look how close it went to turning pink, and it never did. Still green. And if you were able to go long right here at about 7:30 this morning, at about 53:07, let's say, here it is at 53:18, and it's still green. It's just really interesting. And that's the reason why I put so much emphasis in it. That's why I also said I can't get very heavily short when we haven't even turned down. Now look at the gold. Gold is now only up 19. Look at this second bar. Now I can't see where this closed. Maybe something's going on. So yesterday the continuous contract opened at 2161.4, had a high of 2192.2, had a low of 2152.3, and then closed at 2161. Oh, yeah, it did open and close at that level. Interesting, right? And then today it had a huge spike up, and it's pulling back. The day is young. I mean, we're an hour and a quarter into the session. I can't talk about this as if to say, oh, that's the end of gold. No, gold whooshes come in. That's just little eddies just keep coming, pushing the price up, and some of them are actually very big. That's a tidal move. These are little washes that come. The tide, little waves are splashing along. It hasn't got the power, the momentum. Look, the MACD's turned down. The stochastics at 74%. On balance volume is a little bit, the blue line is a little bit overbought. The relative strength is trying to rally, but it's not looking great, but it is trying to rally. So a lot, and yet the 9 is still way over the 14. So that just says to get gold to be negative, you'd have to see it down to the 2120 level. Here is at 2179. So a lot has to happen. Now, I wanted to show you, and someone asked me about this, so let me just go to it. Don't remember exactly what the question is, about bonds. So here's the bonds. This is the 30-year Treasury bond continuous contract. Here's the daily chart on the left. I've got some fib numbers in. I find that the fib numbers in this don't hit exactly. It just gives you some guidance, but it's just, I'll keep it there for the moment. And yesterday I mentioned that the 9-period moving average had flipped to S. That is sell signal, but only on one indicator. That's the 9-period moving average. And so weekly, I have to wait until Friday at 4 o'clock before I can say it's actually there. And here the MACD is still good. It's turning down. The histogram is just about to go negative, but it hasn't yet. Stochastics way down 36%. The on-balance volume is not so great. So this is just saying that yields, unchanged right now. So actually, to put it in perspective, because the Fed, it was like the day before, like nothing had happened really. So whatever was going on is just a continuation pattern there. And I think that the Fed is missing something here. Just from, I do it really. It's not anything that I can talk about with great knowledge because I'm not following it. I hear people talk about this, and it goes in my mind. It might not even stay. But as far as I can tell, I don't think there's no real cure yet for inflation. I don't yet see deflation, but I don't really see prices coming down in areas that are important. I just wanted to mention that I think the Fed might be missing something here. That's just my own opinion. And that takes me to something that I think is quite important. So within that context, the DBA is something that we've had for a very long time. This is the DB Agricultural Fund. It's gone to an all-time new high. How can the DB Agricultural Fund go to an all-time high, and yet we're seeing supermarket prices still holding quite high? The prices are not really coming down. Now, of course, I don't do a huge study on anything. I'm just saying from my empirical experience, I just don't see it. But the price itself is right there. This is as we're speaking right now, it's at, I keep forgetting whether it's an all-time high. I think it's at least, no, an all-time high, of course, now I remember. All-time high was way up in this is a continuous, this is DB Agricultural Fund. 35.58 was the high in March of 2012. It went down to 13.25 in June of 2020. And we've been long since, I think, almost the next month from the 13 area. So 13, I'll give you the exact numbers now. I always forget. I should remember it's 13. DVA is 13. I think it was 70 something. Yeah, 1377 on July the 23rd, 2020. So this has been a long-term play for us. And yet when you look back, it's not even made a 50% retracement from the 35.58 high to the 13 low. So yes, it's acting very well, but it's just telling me that maybe not everything's being read the same way. All right, enough with that. And most importantly, so a couple of questions came in. So Nike, right there, sports and sportswear, Nike Inc. B shares trading up 84 cents at 101.11. I did mention that it had a $100 open about 3 weeks ago. Then it went to a lower low, 97.63. Then it ran all the way to 100, the 102s. Then it pulls back to 98, and here it is at 101. So it has earnings coming out tonight. From the chart formation that I'm looking at, I would be very surprised if there's a huge gain. It can happen, and we've seen quite a number of in the tech sector, a number of stocks went down to lows and then had really good earnings, and they just gapped up. And a number of stocks like Shopify, Wayfair, they went down to lows, and then they had good earnings report finally, and they had a huge big move up. I'm looking at this, and I'm suggesting to you that if Nike, let me just put it this way. If Nike comes out with whatever it is, earnings, today's Thursday, tomorrow being the last day of the week, Friday, if at 4 o'clock Friday, Nike is able to close above the high of the 14th of March, which is at 102.49. That's not a big ask. It's only like 2 points from where it is right now. Who knows where it'll close today. But if it does that, that starts a leg C, but it allows for the first time the 9-period moving average to start getting closer to turning positive. It still hasn't turned positive. The MACD's turned positive. The stochastic is moving up. It's only at 36%. The on-balance volume is suggesting something's not right with the volume aspect. It's down at the lows. And the weekly chart says, oh, man, you got a lot of work to do, Nike. But here's this other side of the coin. If it happens to gap down more than 3 points, in other words, it's at 101, I don't know where, at 101.00 right now. If it gaps down, it makes this dreaded H pattern, and it makes that 97.63 area all the way into April absolutely imperative to hold. Because if it doesn't, if the weekly chart says, hey, lower lows and lower highs. So what it really needs is about a 5-point pop that holds in 10:30, 11:30 tomorrow morning Eastern time. And that'll say, great, now I can try to tackle the 104, 105. But so far, I don't see that.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hey folks, just to sum it up, so we're looking at high-grade copper, and high-grade, first of all, I'm looking at FCX, which is Freeport-McMoRan copper, and they have other metals, trading at 45.79, down 22 cents. It made a nice recovery high yesterday in leg E. It's pulling back a little bit. Leg C in the weekly chart, starting to improve. Now, it's really important that the high-grade copper, I keep typing it here, I have to type it there. There we go. High-grade copper keeps moving higher. So it's stalling a little bit. It's kind of in a range. It's got a cup formation. So there are a bunch of things that I'm watching, but most importantly, the scenario that I outlined in my webinar, and you can get the webinar, there's a lot of information there that I did on Tuesday, is absolutely, this is to me, I discussed that if there was a move to the upside, especially if there was a new record high in the Dow, the S&P, and the Qs, that we could see legs in the weekly chart that suggest the move continues until we get to a D, and then I think we're in for a much deeper correction. That would mean that it can't happen 3 weeks later. That means in April sometime. It would be the earliest that we could get there. That's the scenario. In the meantime, back at the ranch, We're looking at very selective moves here. We're starting to see some areas that had never moved before moving. That's what I discussed as well. Certain stock sectors, certain stocks. That to me is important. That's part of the rotation area. But you're looking at, someone asked me, I didn't do this yesterday. I mentioned it, but I think I forgot. The W formation. And I said, DKNG, DraftKings is doing exactly that. So here's DraftKings in a brand new leg C. Not an all-time high, just a recovery high, leg D in the weekly chart. These are patterns that are repeating, and they're showing themselves in many areas. This is going to be an important area in which to do your technical analysis, or it could just be as simple as looking at 940, and if it's positive, stay in that position. I'll be back tomorrow. Have a great day. Stay tuned for Steve Rhodes and all the great programming coming up. And check out my opening call daily newsletter. See you tomorrow.